Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts. Sitting here today with Eric Voorhees.
I'm Nick Carter.
Nathaniel Popper. I'm sitting here today with Kosala Hemachandra.
My name is Bill Barheit.
I'm Asif Herji.
I get to sit here today with Charles Hodgkinson, Alex Mashinsky.
My name is Melton Demirs.
We have Paul Brody, Dave Jevons.
I'm Sheila Warren.
My name is Bruce Fenton.
And on this episode, we enter a new crypto world where anyone can make their own coin. While this is initially great for the space, the greed it brings can destroy it.
As the budding cryptocurrency market blossomed in 2017, a common crowdfunding strategy known as initial coin offerings, or ICOs, invaded the delicate atmosphere. An ICO takes place when an early-stage cryptocurrency project raises money for a new idea by offering initial investors coins or tokens that either have some utility in using the product or simply represent having some stake in it. But things didn't always work out to the benefit of everyone. In some cases, trickery and scams were easy to hide behind grandiose claims of innovation. As Bitcoin's value soared to all-time highs of nearly $20,000 in December of 2017, the excitement surrounding that meteoric rise helped attract swarms of new ICOs and armies of eager investors looking to cash in. But this sudden ICO investment craze soon created a bubble. And like most financial bubbles, this one was just asking to be popped.
For most people who don't know much about cryptocurrency, obviously probably Bitcoin is the first thing they hear. And then if they dive, a few layers under, they start seeing all these other coins and they're like, which one do I buy? I want to kind of explain to the audience a little bit that, in the beginning of this blockchain Bitcoin world, there was Bitcoin, and then comes this thing called Ethereum, and that Ethereum essentially, and maybe if I would give my example, is kind of like an app store on blockchain, and now people can list many apps, right? You could build a variety of programs. Can you take us to like 2016, 2017, when that realization comes that many people can generate coins? What's that boom, right, and kind of the scale of projects? And then how have you seen it mature over the last few years?
Yeah, one of the first killer apps, killer use cases of Ethereum was that anyone could easily create their own token. So instead of having to create an entire blockchain, you could just create an application and set some arbitrary amount of tokens. Like I could make Eric coin and create 1 million Eric coins. And I can imbue these coins with any kind of properties that I want to. And this is a tremendous way of raising capital. So in the 2016-2017 ICO boom, ICO stands for initial coin offering, there were literally thousands of projects that would write a proposal of what they wanted to build and issue a coin and let people buy the coin. The idea being, if that project was successful, the coin would appreciate in value and everyone who bought the coin would make money from that. Not really so different than investing in any kind of startup situation, but it lowered the bar so low to creating these that a ton of garbage emerged. Like anyone could just make a white paper, which was really just a marketing pamphlet, and raise $20 million or $50 million. That's obviously a problem because most of those projects are going to fail, but that's how markets work. People that make good investment decisions are going to enjoy the fruits of that labor, and people that throw their money after foolish projects will lose it. So a lot of people felt like the ICO boom they felt like it was a disaster and it was kind of a black mark on the industry. I look at it pretty differently. I think the ability for any person in the world to raise money from interested parties without asking anyone's permission and to do it in a capital efficient way is a profound innovation for humanity. And it just takes a little bit of personal responsibility to realize that you shouldn't throw money after every project just because someone put up a coin in a fancy brochure.
Well, I think in the early days it was all ideologists, or ideologues, if you will, people who had a big vision that came out of that cypherpunk movement and what we saw for the following 5 to 10 years, and they had this grand vision. And when blockchain was invented, and I think by 2011, it was pretty clear, at least in my mind, Bitcoin was the thing, and then everything grew on top of it. We saw Ethereum and smart contracts. That was largely volunteer driven. and it was people who had a grand vision. I think in 2017, what we saw was the introduction of, let's call it, the people who wanted to make a ton of money and possibly the fraudsters. So that was the ICO boom. Like, there's so much money here, we can't ignore it. And you saw some pretty great projects, and you saw some really terrible things happen, which nobody could figure out the difference between it because there were so many and the market was going like that. And so that was a dark day, if you ask me. And that is the type of market where regulation happens, because people got ripped off to the tunes of hundreds of millions, billions of dollars, and that's when the regulators start to pay attention. And that's the same thing that happened in the stock markets back in the early 1900s, 1930s, et cetera, was, you'd see these giant things and they were all Ponzi schemes and all that stuff. Same thing happened in 2017. I think the crypto winter we had was that stuff started getting cleared up. There was those crazy price booms. Everything was, going crashing. And so, yeah, there was a lot of negative press, and I think that's healthy.
The biggest wave to date in 2017 was this ICO wave. An ICO is an initial coin offering, so it was sort of a marketing term, kind of almost sounding like an initial public offering. And in many cases, that's kind of what they were, but they weren't generally following securities regulations. So a lot of them were securities violations. They were in violation of the rules in jurisdictions like America. But what we saw was hundreds and hundreds of these projects, sometimes at huge, huge valuations, and they'd raise huge amounts of money for tokens that, sometimes didn't have much value at all. But there is some projects that have come out of that have gained traction, and they've continued to grow, and they have a lot of people working on it.
What is a token? How did ICO's ability to fractionalize investments like this work, and how did it level the playing field for anyone to invest in a project they like?
So the ICO experiment was definitely a new way of aggregating capital and providing that capital to projects or startups that were promising to build something. So you effectively took a bet by reading a white paper or reading some kind of a summary of an idea, and you pulled together with hundreds, sometimes even thousands of others to give the company a chance at building this thing. Normally, what happens with startups, and this is what I did with 7 of my 8th startup, right? The first 7 were all venture backed, and one way or another, we created an idea and then ran to a venture capitalist or an investor, convinced them to invest in the project, and they were either accredited, they were basically a very large investor, or they were a venture fund that basically decided to back the project, which is very different than what we did with the ICO. The reason Celsius did an ICO or initial coin offering was that we wanted to seed the community to be our first set of users. So we got several thousand people who participated in the ICO, and they were our kind of seed customers. When we launched a product 3 months after our ICO, the first few thousand people who used Celsius Network were people who actually held our tokens, and they had an incentive. They were basically wanted the project to become successful, right? So the idea of a token is pretty simple. It's just like if you fly Delta Airlines and you get airline miles, right? You get a benefit, you get an additional award for using this or that airline. The same way, when you use Celsius Network, you can basically earn more by us awarding you these tokens.
Talk about that wider scale adoption and going beyond the sort of standard Bitcoin and the narrow focus that maybe it had.
Sure. Well, one of the things that the kind of tokenization concept represents is your ability now to raise money. In the ICO, or now IEO boom that we're seeing, or initial token offering, whatever you want to call it, is that you can go direct to retail investors or institutional investors for that matter and raise funds, whereas before, if you had a startup idea, you would probably go raise seed or angel funding from people who were in the business of seed and angel funding. And those people knew how to do their homework, they knew what questions to ask. And we used to have this saying, that people who learn Latin, in school would learn caveat emptor, which is buyer beware. In other words, do your own homework and don't expect some overlord to be there to protect you at all costs, that you as the investor or buyer or consumer should be in a position to educate yourself before you go and do a business deal or invest in something. And so in that regard, this idea of being able to raise money online, it's simply a technology application of something like Ethereum. The ability to create my own stocks or my own tokens and then sell them to the public is not something that is new or novel. What's new about it is that the people can control it themselves.
So because cryptocurrency and blockchains are open source, anyone can copy them, change their code, iterate on them, and design any kind of interesting thing they want. So people are doing exactly that. They're building all sorts of decentralized financial systems which test game theory. Most tests fail and people build systems that don't work or where people get totally destroyed because they messed up a variable or they didn't consider something. But it's a messy process, but that's how innovation happens. So the innovation happening within cryptocurrency is just staggering, and people are able to experiment with this stuff at rapid speed. They don't need anyone's permission to do so. And because it's all open source, everyone can see what everyone else is innovating on. And that's how you get things like these decentralized exchanges or things like yield farming, liquidity pools, and it's just like a never-ending fountain of innovation for people that are interested in building new things.
Anyone, any hacker, a bunch of kids at MIT over the weekend can create a token on the Ethereum network, go to Twitter or Reddit, and simply set up a web page and say, I'm going to sell this token over the weekend and raise money. Now, depending on how they do that, that may actually be illegal by today's definition of, for example, a securities offering. Right? That is going to change because it is impossible at large scale to regulate that in a way that makes any sense, because what does a border mean? Where was the person who did that offering? Were they in Cameroon? Were they in Cambridge in Massachusetts? Were they in Mexico? Where is it legal? Where is it illegal? Who gets to decide? But if it's a world computer and a global internet, what is a border? So in the digital realm, we have to completely rethink these ideas.
You could do it completely ignoring the rules around the world and pretend like, okay, none of the rules apply to me because I am in Malta, or I'm in Singapore, or I am in some island. Or you can say, look, I am going to do it according to the different regulation. And this is where there's a big misunderstanding, I think, overall for ICOs or initial coin offering, because normally ICOs did not file with FinCEN or file with the SEC or with the FCA because they looked at themselves as things that did not need to be regulated. And because of that, they avoided talking to regulators. And most people look at regulation as something that conflicts with digital currencies. But the reality is that you could be fully compliant and at the same time do an ICO or do a fundraise as long as you follow all the rules, right? So there are bad examples of ICOs, but at the same time, there are good examples of ICOs. So I think today the rules are much more clear. They were not that clear back in 2017. What's most important is that if you use Uber every day, or if you use Facebook, you are creating the value in that company because you are the one who is using the network. And none of those companies normally invite you, the customer, the user, to get any piece of that company, right? No one received an invitation from Zoom during COVID because you were using Zoom every day to own some of their shares.
Now, the ICO boom, as people refer to it, part of that was simply a function of the fact that in the last run-up of Bitcoin and Ethereum prices, we had so many new crypto-rich people with so much disposable income, they were willing to throw money at a lot of these new token offerings. Meaning people had, like in my example, kids had created a token over a weekend and they could raise a few $1 million because whatever it was going to do, whatever the promise of it was, somebody was going to buy it. I'm not claiming that's a good idea. It's just an application of technology that some people basically invested in without actually understanding what they were invested in. Not understanding what you're investing in is not a new idea. People have been doing that for 1,000 years. It's just that this technology enabled people to do it quickly and efficiently. And that's a good thing, right? Because there are lots of good applications of people raising funds for a project quickly and efficiently. right? And so we need to put it in the context of what problem we're trying to solve, what decentralization is going to mean, why we need to rethink regulations in a borderless online world.
And getting a little away from the sort of the financial world and more into the human experience in that time. I mean, this was a time when, Bitcoin itself went from about 1,000 up to about nearly $20,000 in value. Various altcoins and different crypto projects in the space were booming for better or worse, reaching highs that many of them still haven't yet rebroken or tested, if they have, only just. I mean, what was the feeling of this capital inflow, this masses of money and excitement coming into this space in that time? What did it feel like to be on the inside?
I think 2017 was really crazy. I mean, personally, I felt it was a little too much. I became uncomfortable going to conferences and things like that because there's just so much noise and so many people and so many different things going on. It becomes kind of overwhelming. There's a lot of low quality projects, a lot of difficulty finding the signal through the noise. Very exciting time though. There's a lot of really fun things going on, and sometimes even the hype and the craziness can be, if nothing else, entertaining.
I remember the parties the cryptocurrency space had in 2017 and in 2013. They were extravagant. I remember hearing about Mo Levin's party for the North American Bitcoin Conference in 2018, right when Bitcoin hit $20,000 for the first time. I mean, they just like every opulence you could imagine and vice you could imagine, they kind of compressed together into one gigantic nexus of vice and opulence. They rented the Versace mansion. They rented whole strip clubs. Everybody was driving Lamborghinis. Why not? One guy crashed one on purpose because he had so much money he didn't care. And then suddenly the crash comes. And 2018, at the end of 2018, 2019, the conferences were a lot more Spartan.
It seems to me that one of the things that made Ethereum special, whereas Bitcoin was a self-contained product, and it did one job, it did it very well, that was the end of the story. If you were to visualize Ethereum, you could almost say it was like an Apple app store, and that it had many applications that could run on top of it. And through this process, it allowed many tokens to get created. If I wanted to create a Patrick coin or a Kosala coin, everyone can do it. So it kind of started this world of fundraising, of trying to build products in the beginning, and a very high upswing, and then a very low downswing.
It's crashed all the way.
Can you give me a bit of your experience during that time period?
Yeah, when it first came out, there were a couple of other coins that decided, okay, we are going to try it out. Rep is a reputation token, is one of the early ICO offerings back then. And they came out, they tested out, they did raise money, but it became a thing and then people started to notice it, and then people were like, oh, okay, we can do the same thing. So I feel like initially, people actually put a lot of thought into it. They actually did research, they did proof of concepts, they did programs, they had a good community behind them before they actually went for the pre-sale, or the ICO, initial coin offerings, where people pay and get some token in return, which does not have a value yet. It's under the promise of, it's similar to how Ethereum first came out, right? They're assuming at some point in time, this project will become live, become reality, it'll do whatever it promises now, and then this token will have value. A whole bunch of initial ICOs actually did their research. They wanted to create something. They actually had the passion to do something. But I feel like there were a ton of bad people or bad actors who just took it as an advantage and then just created things that out of nowhere. It doesn't necessarily need to happen. They figured out, okay, this involves cryptocurrencies, and most likely these people will never come after us. And just created ICOs one after another, and then people just started investing and believing in them, because I feel like in real life that wouldn't have happened. In real life, if someone come up to you and be like, hey, by the way, I have a really good idea. I'm gonna send a rocket to the moon, but I need $75 million. That's not you wouldn't give them $1 million if they just walked up to you. Unfortunately, that wasn't the case in Ethereum space. They realized, okay, we can trick these people. And everything is digital. It's not like there's no face-to-face communication. Anyone can put like fake pictures and then act all educated, act like they went to universities, and created this like whole whole bunch of fake projects where people invested money in it, and unfortunately it did not become a reality. So 2017 was all about like super hyped up ICOs, and towards the end people started realizing, okay, we messed up, like we got ripped off, and just like everything just died down. And that's basically why we are still talking about 2017. It had a good start, but it was overhyped at some point, and then people took that as an advantage. So that's why I want to I keep telling everyone that it doesn't matter what platform, what world you live in, whether it's like inside Ethereum or inside blockchain or in real life, you have to be always aware of like bad actors, bad people. And it's gonna happen, doesn't matter wherever you are, just be aware that it's possible in the internet, even more than real life.
So as Bitcoin started to run in 17, and again, if you look back in time, Bitcoin's done this multiple times, right? Where it's bumped along, it's run up incredibly, crashed about 80%, then bumped along at the bottom for a while, then it runs up again. Now, every time it crashes, it's higher than the last time. And so over time, it's been a relatively steady up and to the right progression. So what happened in 17 was another one of those runs started, okay? And it was madness. When I was at Coinbase in that period, we grew 40x in transactions, okay? Very few companies survive that kind of growth. And we did. We scaled the company massively. We put in a tremendous amount of infrastructure to do all that, and we were able to cope with that growth. And then I distinctly remember with the ICO boom that was going on, because what happened was as it got going, developers coming into the valley, who were in the valley, they turned to two things in that period of time. They either turned to machine learning or they turned to crypto, because these are the two hottest things at that time. And we had all this innovation starting, all these projects getting bootstrapped. They bootstrapped them through ICOs, which was supposedly the way to do it, okay? It led to some great projects launching, and it led to a lot of scams, okay? And one of the hardest things at Coinbase was trying to decide which projects to actually bring onto the exchange versus not, right? We took that very seriously, that task.
If we go to 2016, 2017, kind of the advent of Ethereum, it allowed people to start to create new products and new tokens. I think with that, there was a little bit of a gold rush, almost people using it for fundraising mechanisms, right? And I think through that process, people started taking applications and saying, okay, let me find and try to make this blockchain so that I can look more attractive, or like I'm a cutting edge project to a certain group of investors. Now, I think through that process, people started to get a little disillusioned, right? And I think almost at the same time, and would like to get your perspective, at least from my side, we saw corporations almost start to deploy blockchain pilots. And in some sense, I feel like it was more marketing and PR than substance at some point. Like they almost wanted to go on the blockchain tourism, I think I've heard you say in the past.
Blockchain tourism, innovation theater, we had different names for this process. And you're right, it happened at both ends of the market. So you had startups who had no business in blockchain. But suddenly they were like, hey, but if we slap blockchain on it, we're going to raise like an extra 20 million, right? And we can do it in a token sale, and we don't have to give up equity, right? We estimate something like 3/4 of initial coin offerings didn't even produce a product. Not even a product. And by the way, that's a terrible record even for Silicon Valley VCs, right? And then on the other hand, you had big companies where somebody said, we want to show the board that we're innovative, we're going to deploy a blockchain. There's a wonderful series of Dilbert cartoons where he's like, what color blockchain should we deploy? I don't know, right? And I can't say that we didn't accept some of those projects, but we had a joke. We turned away so many ICOs at EY. We made a poster with one of my colleagues who looks very serious, and under it we said, we just don't want your money, right? Because it was crazy. And none of us wanted to sign up for that. And I said, we can take that money, we'll grow the wrong skills, we'll do the wrong thing, right? And we'll spend the next 3 years kind of finger pointing at ourselves about why we did that. So we passed on a lot of that. And I remember being kind of unpopular sometimes for saying no to so many of those, but I believe that we did the right thing. And I also believe that's a normal part of technology cycle, right? We have these things, they go up and down like this, and the boom drives a lot of interest, but the real work comes afterwards usually.
Anytime there's new technology that attracts a lot of capital, you are going to see a lot of people latch onto that and try to use it to enrich themselves. And I certainly think a lot of what happened in 2017 with that ICO bubble was a result of people looking at the cryptocurrency space, not coming in early enough to invest in Bitcoin or Ether and saying, wait a minute, like, how do I get into this? And I do think the idea of tokenization and particularly building smart contracts on top of Ethereum, which could be utilized in a variety of different ways to create new financial primitives, was really exciting. In that era's iteration, right, it didn't work because the primary goal for most people was not building something, it was raising capital. Right. Now, many of the projects from that era that raised capital were able to do really amazing things with the capital that they raised. Some were not, and some were outright scams. But I don't think that's unique in any way to cryptocurrency. It exists in every part of the VC industry, right? Look at the 2000 internet bubble, right? People didn't know pets.com from amazon.com. It all looked the same. If it had a .com, people wanted to own it.
So when you say, okay, let's go do an ICO, or let's go do this thing or that thing, you go and talk to a lawyer, the only reference point they have is argument by analogy. And the analogies are, well, that's a securities offering, so that's not right. So to have that kind of courage, you either have to be crazy or you have to be very systematic and careful. And I was in the systematic and careful category. I think a lot of the people there were either just so ignorant of the law they didn't care about it, or like the Emeritakis, they said, well, I don't care if the law matters or not, I'm just going to go and do it.
When we go through moments like 2017, 2018, where, like you said, there was a decent amount of garbage generated, did we give them like a free punch, like first free punch to the face and like invite them to come in and regulate? Were they just sitting back and waiting?
Yeah, and certainly the SEC, to their credit, went after some very scammy projects that were just literally ripping people off, right? And I don't have any problem with that. But the rule should be that fraud is illegal, and it already is illegal, right? So if someone's defrauding other people, sure, go after them for that crime.
Yeah, overall, it certainly, there was clear legal violations where there was companies and groups and people that definitely broke the laws in their jurisdiction, and that kind of definitely gave the government the ability to come in and regulate those people. There was definitely some that were worse than others. I think one of the worst is OneCoin, which was just completely a scam and had huge numbers behind it.
Could you give a basic overview of the OneCoin Ponzi and maybe how some of that might have affected people, or at least some of the scale and essence of that?
Yeah, from what I understand, OneCoin didn't even really have a real blockchain. It was kind of a database, and it was just sort of selling this grandiose idea with a lot of technical jargon that sounded like a good project, but it was really not based on any kind of substance. And they used very aggressive marketing techniques. They do conferences at hotels, and they had kind of a pyramid like payout scheme. And as I understand, they've been charged with crimes in many different jurisdictions because of how they did this. So, but that was able to exist because of the general hype around it. There was real money being made. So whenever you have real money being made, you have scammers and fraudsters and opportunists who try and jump in there and take advantage of that and take advantage of the greed that people have around those kind of markets. There was a lot of things that were not quite in that category. Some of them were just really incompetent. The people weren't necessarily trying to scam, they just had really bad ideas. And a lot of them had really, really bad economics. And all of that ended up sort of self-regulating the industry in some ways. A lot of those practices that were common in 2016 and 17, you could never do them again today because they didn't work and people learned painful lessons. Some people lost their life savings on some of these projects, and some of the founders ended up with really bad reputations because of it.
Do you think that had like backfired on the community and hurt progress or set the initiative back?
Yeah, no, for sure. Because people started to have this stigma in them saying, okay, no, all the ICOs are bad. And then after that, people stopped, investing in like even good ICOs. But that led to like the good ICOs that actually raised money are releasing projects now. Like whatever happened in 2017, at the end, like the real people who had genuine ideas and genuine like thoughtful ideas that they wanted to implement is coming out now. Like that's this DeFi thing, the craze is all about. That's where it's originated.
What is the role of government and governance? You know, we saw in the ICO boom unregulated scams coming in and just poor projects.
But hold on, that had nothing to do with regulation. A market in its purest form requires only two things. It requires a seller and a buyer, okay? So nobody in 2017 was saying to people, you should buy these ICOs. And if what we're advocating for is permissionless innovation, we can't at the same time advocate for regulation only when we lose money.
So is that what you advocate for? Just the purest market in its purest form?
No, that's not what I
get government
advocate for. I work
from?
in a regulated industry, right? I work in a regulated setting. But I do think to a certain degree, like, what I think is so deeply ironic is we let people go to the lottery, right? I live in New Hampshire. I can drive to the gas station and I can buy as many lottery tickets as I want. I can go to the casino and I can mortgage my entire house to gamble. But I can't buy financial products and services.
The SEC has basically been finding projects that it can paint the issuers of the tokens in a bad light, and then they'll go after them and put up a press release. And then everyone praises the SEC for protecting society. What they don't see is the tremendous amount of cost and damage that these regulations do to the legitimate projects, which at minimum spend hundreds of thousands or millions of dollars on lawyers to try to navigate these rules. Many of the projects never even get going because people are unwilling to accept the risks in gray legal areas where the SEC has not been clear. And the damage that causes in an ecosystem is just really, really intense. And those of us who have been in this industry for a long time have seen that firsthand. I mean, we personally, Shapeshift, we have spent literally millions of dollars on lawyers trying to navigate rules which these regulators say are clear, and they are anything but.
It just seems like a way to perpetuate what's been going on for a while, right? And
it's paternalistic at best, right? The idea that if you're poor, you can't make decisions for yourself. So nanny government will make sure that no one gives you any kind of opportunities which might harm you. It's paternalistic at best and downright insulting.
Is that partially what pissed the government off about this?
Sure, yeah. I mean, obviously the SEC hated this. They were not happy that there is this new method for anyone in the world to raise capital from any other group of people in the world. Normally they're used to, the SEC is used to people asking their permission to raise money and asking their permission to invest. They do not like losing control over that process any more than the Treasury or the Federal Reserve will like losing control over the money supply.
We live in a nanny state where we're told what we can and can't do. And again, to me, the idea of crypto is let's give people opportunities and allow them to make their own choices. And I think there is a fair amount of self-policing that happens within the crypto industry. A lot of us in 2017 did speak out about ICOs and warned people, told them to be very careful, to do their research, and to acknowledge, right, that there is a very real risk that every dollar you put in, you will lose. Do not invest more than you're willing to lose. But I also think at the same time, like, people are looking for alternatives. Putting my capital into Vanguard 2050 target fund earning me 3% per year doesn't change my financial trajectory. Right. It doesn't change outcomes for me. It doesn't change my financial well-being. And so what I'm an advocate for is, transparency. Let's be transparent and provide information and maybe comply with some reporting requirements, but also let's not strangle financial innovation before it ever gets started. I mean, the traditional financial system is rife with fraud and rife with scams and rife with, payday lending and other things that are really bad for consumers. And regulation doesn't actually make anything better. Regulation makes it more expensive to serve high-risk customers. And so the more you regulate, and particularly the more you introduce reporting requirements and cumbersome, expensive regulation, the less likely it is that those financial products and services will actually reach the target audience. They just make it way more expensive.
I think the best thing that happened to this space, frankly, was the whole ICO bubble bursting, because the space kind of went dark for a bit. People really focused on building, and they built some extraordinarily high quality product. And I think when legacy players or other big institutions saw that, they started to feel much more comfortable and confident that this wasn't a flash in the pan. It wasn't run by a bunch of, crazy anarchists who were just trying to blow everything up, that there was something very real here.
We had a board meeting early in January of 2018 where we were trying to plan the next year, and we'd done record revenues in 17. And I basically said to my board, right, next year we're going to do half the revenues we just did this year. And they were like, why do you say that? And it's like, look at the chart, look at what Bitcoin does. The safest assumption is it's going to crash. And so our prediction was it's going to crash January or February of 2018. It crashed, I think, March or April of 2018. And so that's how it went.
What events led up to the 2018 burst of the ICO bubble, of the crypto space as a whole?
Yeah, there was a couple things that led to the bursting of the bubble. One of it was just that a lot of these projects didn't really have a lot of merit. There was just a lot of hype and nonsense, and it was a token without a purpose, and things that could be done easier by a database, and all kinds of bad economics. You had, founders and developers were getting these huge, $10,000,000 rewards for just a few months' work, and it just was hype over substance, and that was inevitable that it would collapse. I think I certainly saw it coming, and I don't take much credit for that. That wasn't like you needed a crystal ball. I think anybody with their eyes open would have seen that crash coming. It was just inevitable because there was so much hype.
So I don't think when we talk about this bubble, it's unique to just cryptocurrency. I think it's a natural part of new technology innovation. And in fact, Carlotta Perez, who's a researcher at MIT, has written a great book about the relationship between technology innovation and financial bubbles and why they tend to coexist. It's a very normal sort of paradigm. The real question, though, is what has persisted? And what has persisted, I think, is this idea that we no longer need intermediaries, i.e. financial institutions, banks, brokers, financial advisors, who are sitting between people and capital markets.
I've heard a lot of the people who've been in the space a long time have said that they prefer the bear markets the best because it gets much more quiet. You don't have that noise and that craziness that you had in 2017. People were able to put their heads down and focus and build. And so you saw a lot more high quality conversations and building. You saw high quality people come in who were really serious, looking at serious investment philosophies and looking at the space from a much more reasonable way.
So it took a lot of the heat out of the ICO boom. Things went back to, the crypto winter, which we've been through before. And luckily, those people who were serious about it kept the projects going, right? And they persevered. And a lot of the best projects that are finding traction now, again, things like Filecoin, Uniswap, et cetera, they were incubated in that period of time, right? And now again, we have great take up. Bitcoin's gone from roughly 10,000 to roughly 60,000. Again, tons of developers are coming into the space. But the ones that are here because they really believe in it, they'll weather the next winter. There will be one, but they'll be the ones that weather it. The winters actually are good because they shake out a lot of bad projects. That's the value of them. We may not like it, but that's what it does.
If you look at the beginning of the internet and you say, okay, how many great companies were created between 95 and 2000, which was the dot-com boom? Not that many, right? If we count back, we'll count Amazon and Google and maybe a few more, but you can count them on one hand or maybe two hands. And it's basically the same thing is going to happen with the ICO boom, the 2017 boom, where very few great companies have come out of that period. And those are also the best performers. Yes, there were 10,000 ICOs and most of them were bad, but the good companies have created a lot of value for a lot of participants.
What was your reaction when 2017 comes around and Ethereum and all of these ICOs?
It was 98% fraud and people lost so much money, and it was just like rampant crime. I mean, and the number of fraudulent projects in there was just amazing. And Ethereum was real, but almost everything built on top of Ethereum was not real. And most of those projects ended up disappearing. And again, I think I thought that would do a lot of damage and kind of scare people away forever, but it didn't. And it drew in, one of the things that's happened over Bitcoin's history is you get these speculative spikes, and at first it's a lot of criminal stuff and bad stuff, but enough kind of serious programmers are drawn in and take a look and start working on something themselves, that once that speculative fever subsides, you've got this new crop of people working on serious things. And that's what you have now. 2 years ago, all these people got into it because it spiked and it was a lot of crime. But then a bunch of serious programmers started working on these projects that are now working.
The ICO bubble is remembered for who coming in?
There was a lot of people coming in. I think it was a lot of speculators and profit seekers, but it's a learning process. Some of the best people in the space now who have very reasonable and thought out positions came from coming in looking to make a quick buck, and they've learned and they've evolved over time. And it is a very brutal space that educates its participants very quickly. So there's a lot of people who came in maybe for the wrong reasons or naive reasons, and trying to get rich quick on some speculative coin, and now they've really evolved their thoughts, and they have a much more sensible philosophy, I think. So, a lot of good people came in and got a lot of good education from that experience.
Well, first of all, it was a relief because it pushed out a lot of the spurious token activity. A lot of the ICOs sort of died off, and the SEC, the regulators were going after all those projects that had raised capital from retail investors in sort of 2017, 2016. And it was a real relief because that noise died down and the malinvestment died down too. But I never doubted for a second that we were onto something with this industry. I never have. I've had extreme levels of conviction on it for the entire time I've been on it. So I was not concerned that, maybe this whole crypto thing is going to go away. Not for a second did I think that. So a lot of my friends did, however, leave the industry. A lot of people exited crypto. They sought jobs elsewhere, and I'm sure they bitterly regret it now. We were deploying our first fund in that time, and it was an amazing time to be investing in startups because you had extremely high quality entrepreneurs with high levels of conviction. They were building products that they believed would be useful. They were building the core financial infrastructure so that digital assets and cryptocurrency could actually work and go to the mainstream. Those entrepreneurs did not have the benefit of there being a huge spotlight on the industry. So these were generally people that were good stewards of capital and had sound sort of business ideas. So it was honestly an amazing time to be working in the industry. I'm a little nostalgic for the crypto world, frankly. So
then would you say that when this burst occurred, when we saw these massive falls from the peaks across the market, did it cause people to stop believing in cryptocurrency?
Yeah, it did. It shakes out some people, but it also makes true believers out of others. And that's one of the things that so far has been really strong, particularly for Bitcoin. You end up with people that kind of get shaken out, but then true believers remain. And so far, they've been rewarded for remaining and holding during those tough times.
What do you think if you were to pick 2-3 applications of blockchain that aren't Bitcoin, that aren't money? What do you think those are?
I think we will look back on a couple of transformational big investments that came out of the ICO boom that will be really positive. The first is supply chain management. So the beauty of a token and the genius of a token is if I have a token in my wallet and I send it and I put it in yours, that it has to come out of my wallet and go into yours. That's how banks manage money, right? If I have a dollar in my account and I send it to you, my account has to go down for your account to go up. Shockingly, the way most companies work, if I take something out of inventory at one warehouse and send it to you, it doesn't force me to reduce the inventory across the network. It doesn't require that balancing out. Companies are not as joined up. Tokens on blockchains force companies across their entire supply chain to properly keep track of stuff and to keep track of it as it crosses all these enterprise boundaries. And so I believe we will look back upon blockchain as the beginning of an enormous global supply chain transformation, where you'll be able to see what happened, where it happened, who bought what, and then not only will we be able to see how things move from one company to another, but using smart contracts, we'll actually be able to see products as they move in one direction and money as it moves in the other. So it is going to be transformational in supply chain management.
Would you say you think that ICOs did anything to democratize fundraising?
Yeah, I think ICOs overall, despite the very, very many negatives, I think they probably are an important step in the evolution of these markets, because it did show that you can raise a lot of money quickly, and that's a very good thing. There's some reduction of friction in that process. So I was actually excited. Coming from the securities industry, I knew that a lot of these were securities violations right away. I just looked at them and I knew they were violations. But I was also simultaneously excited, because I know that while they're violations, I also know that the rules are not impossible to comply with. You know, Tesla is a security, Apple is a security, Microsoft is a security. You can be a security and still comply with the laws. It's just harder. So I'm actually quite encouraged that by showing sort of a proof of concept that maybe didn't do things quite right, with some fine tuning and some of the efforts that a lot of industry players are doing now, I think that could evolve and become a really positive thing that will change the future of the securities markets.
We've made it to the other side of an important battle, and cryptocurrency is stronger for it. On our next episode, we will explore the fallout and the pros and cons of government adoption. I'm Patrick McLean, and this is the Podcast Corner.